You're about to listen to the Yet Another Value podcast with your host, me, Andrew Walker. Today's podcast is a really interesting discussion with the founder of Fintool, Nic. Nic has a lot of insights into AI and investing. And look, I know what you're thinking. You're saying, "Oh, hey, Fintool is a sponsor. This is a plug podcast." I don't think it is. I ask him a lot of different questions about how individual investors, fundamental investors can incorporate AI and improve their AI workflow in a lot of different ways. Right off the top, like right at the start of the episode, I'm going to hit him. Hey, what is the one thing that a fundamental investor can do to improve their usage of AI right now? I asked lots of different cases, use cases, downsides, everything. I think you're really going to enjoy it if you listen all the way through. So without hesitation, here we go. My interview with Nic from Fintool. All right. Hello and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker. With me today, I'm happy to have on Fintool's founder, Nic Bustamante. Nic, how's it going?
I'm good. Thank you for having me on.
Hey, thanks for coming on. Just remind everyone, there's a full disclaimer at the end of the episode. Nothing on here is financial advice. You can listen to the full disclaimer at the end. Nic, I want to get started. So I'm super excited to talk to you. I have been talking to Fintool for about a year now. You guys suggested coming on. I am always looking for ways to improve using AI as an investor. And obviously you guys run an AI tool for investors. So I thought this could be a really good conversation. Let me start off. First question, just if our listeners stop listening after 3 minutes, let's give them something to take away. If you were having, the average investor who comes on and listens to this and they said, hey, what is one thing that, Nic sees thousands of investors use AI. What is one thing that Nic thinks every investor could improve their AI usage? What would that be?
Yeah, so we work with a lot of hedge fund. We work with large banks. We work with big consulting firm like PwC, and our product is sort of like AI equity research analyst. What I've seen from successful hedge fund and value investor using AI is they have a clear breakdown of their workflows. So they say from ID generation to making an investment, or even not making the investment, they broke down their workflow into a very specific task. Usually they did that to train their analysts, right? But now they do that and say, okay, among my 50 tasks, which one can I delegate to AI? And some of them are pretty small. And you have, I was chatting with a fund this morning. They do quarterly memo. So Home Depot, new earnings. And so they will ask the analyst, okay, read the earning call, read the 10Q, the press release, the 8K, and you will draft a note. You will extract the key numbers, et cetera, et cetera. Well, it turns out if you feed Fintool with an example of a memo for, let's say, Q3, and you ask, do the same for Q4, Fintool will do it automatically, right? So they will delegate this task to AI. And by the way, they will do Home Depot, but they will do Lowe's, and they will do like more, companies. So I would say it depends on your task. You're going to choose them and delegate some of them to AI. And I can give you, more concrete examples. Screening, I think, is a good one, where today you do quantitative screening. You say, hey, I'm looking at companies below 10 billion in market cap, healthcare, P ratio under 30, ROIC, blah, blah, blah. But then you can say to the AI, okay, look for this. And also, I want companies that are founder-led. I want the CEO is mentioning like buybacks, future buybacks. I want you to check if they have the cash to do a buyback. I want you to check if they did successful buybacks in the past. Like, did they buy anything below the intrinsic value in the past? And if yes, you combine, you rate the company, and you show me the opportunity. And so, yeah, it's per task and per workflow.
No, so for screening, I found it really interesting, exactly what you're saying, where you say, hey, find me companies that are trading below 10 times price to earnings. And the CEO has said, I think we're trading below intrinsic value in the past 3 quarters, right? And that's really interesting because the 10 times price to earnings, you could have done that on Bloomberg or anything for 15 years, but marrying it to something specific in the transcript, and obviously this is a very generic one, but those are really interesting. But I want to actually, the memo thing really jumps out to me. So I want to ping a little bit on that, right? So you used Home Depot as your example and said, hey, Andrew is my analyst. We have a position in Home Depot every quarter. Andrew kind of writes, most people are familiar with this. You do the one-page overview, right? If you're
Yeah.
a very institutional investor, it's going to be Home Depot reported $1.50 per share in earnings. The consensus was $1.35. We thought it'd be $1.40. Here were the same source sales trends. Here's what we're seeing. Here's that, right? It's going to be a one-page summary of everything you need to know. I'm interested when you talk to people who kind of start outsourcing that to AI, right? How heavily are they outsourcing it? Are they doing like, look, Home Depot's got 100 different retail competitors. Are they saying, I have a position at Home Depot, so I make the Home Depot memo, and then I have AI make the 99 companies that I follow so that I don't have kind of the hallucination memo? Or are they going so far as saying, hey, everything is getting made by AI. Like I don't get rewarded for regurgitating what's in the quarter. I kind of get rewarded for I'm really interested in that.
I think here, sell side is a good example. You're analyst at a bank, you cover like 50 names, and you have to send a report to your customers in few minutes to like an hour about a new earning release, and it's very standard. There's like no customization. Maybe the customization is, the estimate with this, and so you feed the document, the initial memo to Fintool, and Fintool will duplicate. You will review the output saying, okay, this is good. Maybe you're going to add a line. Usually what they do is they add like either in the summary or the conclusion saying, hey, we're still bullish and we maintain our price target to blah, blah, blah. And then they publish. So that's a very simple. For hedge fund, what I've seen in the memo is less standardized. Every PM, every analyst, they have like custom memo. That's it. Also why AI is popular is because there is no such thing as like one memo for every company. You might have like one memo per company or per industry. And also, depending on your thesis, you will look for different thing, right? So sometimes they look for, margin pressure, mention of inflation. And so that's very useful when they give us, an example of this memo that they upload and the AI can duplicate it.
I like that you said example, because one thing I've tried historically and I haven't had success with, and I'm interested if you've had people like, I do a lot of writing, obviously, and I have tried uploading like, hey, here was my thesis. Here was a successful thesis I had on a company that played out. Find me a similar company. Find me a company with a similar thesis. I haven't had much luck in terms of that like pattern recognition mirroring. And now maybe I'm doing two quirky examples, but have you had people kind of had success with saying like, if you're a mutual fund or even a hedge fund, let's say you're a concentrated hedge fund, you might have made 50 investments over the past 10 years. If you're super concentrated, maybe it's 500 investments if you're semi-concentrated. Have you had people say, hey, here's my top 50 ideas, like generate me 5 ideas to research that kind of look like this? Or another way I've thought about it is, hey, here's my track record. Here's my track record. Here's my current portfolio. Tell me which things in my current portfolio look like my best investments and which things share qualities with my worst investments. I haven't had much luck, but just because me drooling on my mouth hasn't doesn't mean no one has. So have you seen people, a lot in there, but have you seen people have any success with that?
Look, it's because it's super complicated. Even us, we do that only with super enterprise customer. We ask them, hey, give us your portfolio. Obviously, if it is like some hedge fund, for instance, here that we have in San Francisco, they are HMI Capital, whatever. Those guys are like super concentrated, and you can look at the 13F. But for like firms like TCW, right, they have like 200 billion under management. So they give us the portfolio, they give us their coverage, universe of companies, and then what we want from them is also additional information. And that's why now, and every solution is similar, right? We ask them to connect their data. So we go to the SharePoint and we download the data. And in this data, they have like memos of like, hey, here's our thesis on this investment. Here's this why we invest in the investment. And then we do the work of looking at the date, looking at the stock price, and trying to gather as much information as possible to identify what's a winning investment for them, and then trying to duplicate on the whole stock market. But it's not something that you can do with consumer large language model. It's very intensive and very error prone. So just super hard.
So this actually, I had a question on this later for later in my notes, but I'll just ask now. I was talking to a friend the other day and talking about using AI, And he kind of hit on something, and both of us actually were at the same time. You're like, hey, if you're Renaissance, right? If you're
Yeah.
Renaissance and you're making 100,000 trades a day, AI
Yeah.
can be super useful for like course correcting you and studying your history, right? Like you've got so many
Yeah.
data points. Whereas my friend was like, hey, my average turnover, let's just make the numbers easy. I hold 8 stocks and I hold them on average 2 years. That means on average, I'm making one investment per quarter, right? And he's like, I can't now, not he's not saying AI isn't useful, but in that way, he's saying I don't generate enough data for AI
Yeah.
to really be able to go back and say, hey, like everything you're doing is so esoteric or so niche or so at the edge. He was saying AI just can't help me in that way. Doesn't mean it can't help in a lot of other ways, but he was saying, like, I want AI to make me a much, much better investor. And he was like, hey, it can be your super Google, but it can't like really improve you like it could a quantitative fund. What would you say to
Yeah.
that?
Yeah, very familiar with the Renaissance use case. You may have noticed, but French guys like us, like me, we tend to work like either in AI or in math-oriented stuff. So look, when Jim Simons showed up and he said, "I'm going to apply machine learning and statistics to the stock market. I'm going to predict prices, and I'm going to identify price discrepancies with machine, and I'm going to trade on that." And people like the traders that were in those floors at the bank, they were like, no way, I rely on my intuition, I blah blah blah. Obviously it didn't work for Jim for maybe 5 to 10 years, and then now Renaissance is 90 billion compounding at 30% a year, so ultimately it worked.
I
It
think you might
worked.
be low on the compounding there, by the way.
I wish I could have invested, but so look, it works for this quantitative data side. And now we have the qualitative data side, which is more like our customers, value, long-term oriented. And obviously those guys, they say, hey, I rely on my intuition a lot. It's an art and not a science. But large language model, now they have an understanding of text, data, nuances. And so ultimately it will work if you give the large language model enough data. So you start with, the SEC filing, the earning calls presentation, the expert call network, et cetera, et cetera. You input your criteria, and at some point the AI will run offline and, find investment opportunities. And that might be different than the investment opportunities you had in the past, but it will be the same, right? If you do small cap, it will be small cap oriented. If you do profitable company, it will be only profitable companies. So I'm 100% sure it will happen. I understand that people have a lot of skepticism, like back in the days when the math guy wanted to apply ML to the stock market. And I can tell you, as a software engineer, I lost my job to AI. And you have to understand that 2 years ago, AI was writing maybe 5 to 10% of our code, and it was buggy. And we were pissed off at the AI. And then it went to 30%, and then 50%. And today, it's like 100%. AI is the best software engineer on the planet. And it's inevitable for every profession.
Let me ask you the next question then. I've written before and I've said before, I worry, look, 50 years ago, you could have made really good returns I'm rereading the Snowball right now. And a lot of what Buffett did was literally go through Moody's manual and say, hey, this company trades for 10 and they earn $5 per share every year and they have $20 per share in cash. What a deal. And he bought it. Now, obviously the man did a lot more than that, but literally those are the stories in the book, right? You could have made tons of money doing that 50 years ago. Renaissance comes along, and Renaissance obviously does this on steroids with a lot of other stuff, but that quantitative stuff is dead, right? For the past 20 years, you could make money doing qualitative stuff, things that weren't in the numbers. If your thesis was, this is trading for 8 times price to earnings, I think I'm going to make alpha, you were dead. If your thesis was, hey, this trades for 30 times price to earnings, but the earnings number is actually 8 times once I make adjustments or because this, you could make a lot of money. I worry quantitative's dead. Renaissance killed it, AQ, whoever. I worry that the qualitative AI is going to kill it. Can you, are professional investors going to have a role in the world in 5, 7, 10 years?
Look, the reason I started Fintool was pretty much at the Berkshire meeting because, I work in AI for a decade. I went to the Berkshire meeting one time right after selling my previous company. My previous company was a legal AI company, a sort of, alpha sense for the legal industry. And again, I hear Buffett saying, yeah, if I do small cap, I can do like 50% a year, blah, 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 just scanning through opportunity. This year, I show up to the meeting and Buffett is like, well, I had this booklet of like Japanese companies and I read it all and I look at what makes sense from a business perspective and the management. Obviously, very qualitative assessment that is impossible to do before the large language model. And now the AI is going to do it. And I think it will still be possible to generate alpha. It will be sort of like obviously harder, like the market will be more efficient. And a lot of it will be done by AI. The same way, us as software engineer, what we do today is like we are the architect, we are like the meta thinker, but the AI is writing 100% of the code. It's almost like when you interview someone, you don't even, it doesn't even matter if the guy knows how to code because the AI is doing it all. And 1 year ago, I was with my friend in San Francisco. The guy went to MIT and then he went to Stanford. And he was like, no way AI is going to write my code. And everyone was like, yeah, obviously, right? It's way too hard, like similar to like some of our customers today. And then it happened. And then it's like, okay, what should we do now? And basically, you are this orchestrator of the AI systems.
This actually dives nicely into a thought I've had in my mind. Do you watch? I think you and I have talked basketball before. You follow basketball a
Yeah,
little bit. Am I remember that correctly?
yeah. Especially in San Francisco, we have great
I'm
team.
glad you. So one thing I've had in my mind is Steph Curry.
Yeah,
Top 15 player of all time, multi-time MVP, all that sort of stuff. If you took Steph Curry and rewound time 50 years and put him in the NBA, I don't even think he would be an NBA player, right? His greatest skill is the shooting. There's no three-point line, so he can't stretch
yeah,
defenses like that. And also, Steph Curry has a lot of problems with his ankles. And if you put him 50 years ago when he's playing in flat top Converses with the medical science, then I don't know if his ankles can even hold up. So,
yeah,
again, one of the 20 best players of all time, he's not even playable 50 years ago. And in today's NBA, he's probably the most valuable player. I mean, it's him, LeBron, and two other players are the most valuable players of the past 15 years, right? In contrast, I think of like the legacy power forward who wasn't big enough to be a center, but was 6'10", couldn't shoot but could rebound. Like not Tim Duncan's one of the best players of all time. He could had a mid range, but kind of like the Twin Tower style. A lot of these plotting centers, plotting power forwards. 30 years ago, they were super valuable, played out of the NBA today. Can't even get a spot. Roy Hibbert, 2010, super valuable verticality, couldn't even play in today's NBA. The reason I ask is this. You framed something where I think we can talk about the lawyers, but 30 years ago when portfolio manager, quantitative skills might have been the most important things for portfolio manager. Yeah. AI, in the same way that medicine and sports has evolved, AI is going to make some skills a lot less valuable and some skills a lot more valuable. What type of skills do you think AI is going to be like kind of a leverage point where if you were an analyst or a portfolio manager today, you might be saying, hey, with where the puck's going in 5 years, these are the skills I really need to be focusing on?
Yeah. That's a very good question. And I will say today, the only two jobs where you can really see the impact of AI, and AI is the artificial general intelligence, like this super smart system, is, in my opinion, if you are a software engineer, you see it impacts your job. It's very hard to get the job as a junior guy, etc. And if you're a lawyer, and I saw that from my previous company, because lawyers, it's just words. You ask the AI to do NDA, 100% accuracy. And when it happens to you, it happens so fast because every day you have new models, new capabilities. And, even for us, we're like, okay, how do we hire a software engineer? What is the job if it is not coding? And for PM and analysts, I see that with like customers all the time. If you're a large bank and you employ tons of juniors and their job is to summarize AK in a nice way, standardized way, now, everything will be done by AI. So obviously the bank, they say, okay, Jim, you cover 50 names. Well, now you can cover 100 names. But also there's, hey, Jim, maybe you can do more complex work. So let's say you were looking at, Chipotle, and maybe you can look at also the 5 companies that are around, and maybe you can produce like more complicated analysis. It's not like the impact of inflation on Chipotle business, but you're going to do that for, McDonald's, Yum Brands, et cetera, et cetera. And the analysis you're going to produce will be just like way better. And so that's one way you can frame it, is just like you're doing more qualitative work over time.
Let me propose a different hypothesis. And this is one I've talked to people about and I've gotten pushback in different areas. So 20 years ago, 30 years ago, whenever, quantitative skills, right? Your portfolio manager, long-term capital management blew up, but you kind of wanted a long-term capital manager, right? Somebody who could do math in their head quickly. And that is in part because there weren't even a lot of computers back then, right? The Excel and the modeling's been outsourced, but so you kind of get into reading into 10Ks and understanding and getting to niche cases. I want to come back to niche cases in a second, but I have wondered, like, if I could upload the most successful investments of everyone for the past 30 years, put into AI, and AI can start spitting out. I've wondered if that sort of stuff, like anything that's in the filings, all of that edge, all of that alpha is gone. And where the alpha for the next generation is almost, hey, can you go meet with management in a room and read their body language better, right? Or are you better at kind of like, I wonder if the Gumshoes type stuff where, hey, go to the franchisee meeting and talk to 100 franchisees and then plug into an AI model and say, hey, I felt pretty depressed at that franchisee meeting. And then the AI says, oh, the stock is forecasting franchisees are a 7 out of 10 and you felt 3 out of 10. It's a short. So do you think that like Gumshoe work and that person work becomes more important with AI? Or you could tell me, hey, AI can get on the earnings call and read someone's body language better than anyone else in the world. So it's actually worse. How would you think about that?
I think, having a data edge is always a source of generating alpha. And I will say, from my experience working with a lot of like PMs, all the you can generate a lot of information with public data. So you can do it in two ways, just like by better looking at it. So, Buffett is known to be able to compute the owner earnings pretty fast for a company, right? But you can say to AI, hey, compute the owner earnings, get rid of the stock-based compensation bullshit and all that stuff, and rank all the company. Instead of having an analyst doing, one or two company, the AI is doing that on the whole stock market. And then you have, in my opinion, like data sources that are not sufficiently used. I was discussing with one of it's a big firm, big PM, investing in tech, and they say, hey, there are so many podcasts where the CEO of Microsoft is going out there and is going to comment on CapEx, on the new AI capabilities, or is LLM a commodity? And in that case, they are losing money, etc. The guy cannot listen to this podcast. Each of them, the Lex Fridman podcast is like 6 hours. Dwayne Welsh will be like 4 hours. So typically, for example, what we did at Fintool is we downloaded all these podcasts, and then we asked the AI, okay, identify everything that is relevant for an investor. Every mention of CapEx, every new product launch, every mention of how competitors are doing. And I think you can generate alpha that way. But to a point, I think we'll see a sort of like citadel, but focusing more on the qualitative data side. Like, as you said, like looking at a video, analyzing the management pattern, and are they, excited or not, and just trading on that.
Let me. I'm not sure where to go with that. I guess when you find people using Fintool or AI in general as an amplifier, what skill do you find they're trying to amplify the most?
It depends of how AI enabled they are. So we have, we open an account, let's say, 50 seats. And we have the guys that are always on ChatGPT and Perplexity. They will pick it up and ask thousands of questions, right? And we have also some people, they don't even know how to use AI, right? They don't even know, about ChatGPT. They don't know how to prompt. And so
I'm just laughing because I was talking to a very successful investor the other day, and he was like, hey, Andrew, I listened to one of your podcasts and you said if you're not using AI, you're going to get left behind. And I was like, yeah, I really believe that. Like, I can do stuff in 15 seconds that used to take me a day. And he was like, I've never opened ChatGPT before. I was like, oh, buddy.
Yeah.
Sorry, continue. I was just laughing because you hit the nail on the head.
100%. I mean, you go to this meeting, you meet with, a very famous investor, investing legend, and you're excited, and you realize that, he has never used AI. And obviously the guy that is 30 years old in the room is a bit like the guy who set up the meeting. So I will say several level. Very simple, like they have a question. Hey, Chipotle, how many stores did they open, per quarter over the past 8 quarters? And, because it's a KPI, they won't find it in Bloomberg, it won't be in FactSet, and they have to deep dive into the earning calls and the 8K release. And the AI was, create a nice table with a source. It's kind of like 101, right? It's like the simple question on a company. And then you have like more a hard question where you say, hey, same store sale, but you're going to compare that to, the 5 company in the industry. You're going to read every earning calls, and you're going to analyze what the management say about that, right? So like multiple company and merging like the numbers plus qualitative assessment. And then you go on and on and on. And you have like these massive queries where people like scan the whole stock market for a bunch of criterias, both qualitative and quantitative, like, get rid of the stock-based compensation and do this and do that. And the workflow takes, like 20 or 50 minutes to answer the questions.
Let, I'll just make it personal, and I might even clip this out because I suspect that most of my friends who I talk to, and again, most of my friends who I talk to are plus or minus 5 years from me. I talk to investors much younger, but most of them plus or minus 5 years run, similar concentrated value or event styles and stuff. So I suspect most of my friends are using Fintool, ChatGPT, everything the same way, and I think this might be useful for them. The characteristic you said at the beginning is kind of how I use this. And also, I might just clip this specific piece of the podcast out and put it on Twitter because I think this will be very useful for people. The way you described it is kind of how I use it, right? I probably spend 30 minutes to an hour of my day every day in ChatGPT and Fintool. And basically, I am using them like a super Google, right? Yeah. My famous one with Fintool is I was trying to pull what Caesars had said about acquisitions, how well they had done over the past 7 years. If I had done that on myself, I would have had to go through 50 transcripts on my own looking, would have taken me at least a full day of work. Fintool did it in 30 seconds, 5 minutes to go through all that. ChatGPT, I'm using it like a super Google. I'm using them to say, hey, quickly build me same store sales for Wendy's, McDonald's, Burger King over the past 10 years. Like, it's fantastic for those. What do you think I could be? But again, I feel limited because it's just improving and it's grabbing data and it's summarizing it much more quickly, which is great. It's freeing up tons of my time. What else could I be using to, instead of just using it as a super Google or to free up time, how could I be using it to make me smarter? Or what else could I be using to like improve my job?
I think ultimately you feel limited and you're limited by the technology. Finance is pretty hard to nail because it's a combination of words plus numbers. And so all this, finance software like Fintool, they look very basic, right? Data extraction at scale, looking at the earning calls but as time flies and we have like better models, we can do like just more complex analysis, analyzing company. Ultimately, the two breakthrough will be offline and polarization. So polarization, you ask one question and you get an answer. What if Fintool can go and answer 100, 200 questions at the same time? You want a company primer on whatever name, and instead of asking the 5 questions, Fintool will return like business description. How do they make money? The financials. How do they pay the company? The CEO composition. Benchmark that with their peer group, etc., etc. And offline is something that exists only in software engineering, and it's very recent. Is you work from 9 a.m. to 7 p.m. What if Fintool can do research from 7 p.m. to 9 a.m. the next day? Because once Fintool knows how you research company, what's important for you, and how ultimately you make a decision, which requires you to explain a bit to the AI. I'm excited by this opportunity because the CEO comes from a competitor, he's a great capital allocator. They are talking about spin-off. They have plenty of cash on the balance sheet. And just like the agent, will work on the background and try to find new opportunities. And I think it has to do something very complicated, akin to a morning star with the score. It needs to score the opportunity. Say, hey, competitive mode is a 5 out of 5. Management team is a 3 out of 5. And we go from you asking question and being limited by yourself, right? What type of question can I ask? And your time, to the AI just like pushing you information. And you go and you say, okay, this is interesting. This is not interesting. And the AI learns and push you even more relevant information. That's a future of AI system where you don't go and ask a question. The AI push you relevant info.
That's an interesting. So let me just dig into that future a little bit. I mean, that's an interesting future because what it would rely on is your past interactions with AI and your past investing, right? So are you saying in the future, as AI continues to scale, is there going to be almost a moat in, hey, I can upload the past 20 years of successful investments here. I can upload them to AI. It can learn from that. So I've got a moat versus a 21-year-old who's listening to this, who's like, I want to break into investing. When they start working with AI, they're not going to have any successful investments to point to. So they're going to be way behind because they don't have that historical data. Does that question make sense?
Yes, it makes sense. You can also argue that there is a absolute, good investment, right? If you look at the track record of like Apple and Coca-Cola, you can deduct from the past those were good investments. And then you can try with the AI to ask the AI, okay, why they were a good investment and rank, Coca-Cola.
How much of that is N of wanting though, right? Like, yes, Coca-Cola in the 80s when Buffett makes great investment. Philip Morris, famously best performing stock of the past 50 years or whatever. Like, how much of these are N of one where I was like, hey, like I could make a very simple argument for it. Hey, Philip Morris, addictive product, good brand, big moats, you're selling cigarettes, distribution, addictive products, low PT, great. Yes, it's awesome. Or I can make another argument like, hey, Philip Morris, find me something that trades for an 8 times PE because they've got the threat of the government bankrupting them over their head. Like that was very much N of one. And historically it looks great, but things could have gone a different way and the government could have demanded Fannie and Freddie in 2008 style pound of flesh where all the equity belongs to us now. So how much can AI earn from that? I have a follow-up question to that actually.
So, when I discuss with my friends that are working at the high frequency trading firm, they have like terabytes of data and obviously terabytes of, the price and the volume and the options and all that stuff. And for AI to be on the qualitative side, a bit omniscient, like a bit like the Warren Buffett, it needs a bit of everything. It needs the news, the newspaper at the time, the story at the time, and the more data, the more context the AI will be able to, understand what is a good opportunity. Because often, Mr. Market is just crazy. And it's crazy because like China tariff, and maybe the AI can read, what the White House says and what some experts are saying and say, okay, I think like humans are panicking and I think it's a buy, right? So it needs a lot of data and it's still the early days.
I'm laughing because you say tariffs. It's like, man, try and trade an AI on when and what Donald Trump's going to tweet. Good luck with that. So we've mentioned Renaissance several times. Quantitative has been taken over by computers. There's no doubt about that, right? Like quantitative is dominated by computers, learning models, AI, whatever you want to call it, dominated. Qualitative, to my knowledge, has not. Now there are things, you can get a quantitative fund that runs on value factors, everything, but concentrated qualitative has not. I haven't even seen anyone try to do an AI. Have you guys thought about back testing or launching like, hey, here's our qualitative AI concentrated portfolio? How do you think a fund like that will work, or do you think there would be any success there?
What is very hard is when you have like a machine learning models and you want to test the models, you need quickly to see the output of the test. So if you train like a recommendation system for, I don't know, Tinder, you want to swipe right, swipe left and look at the data. But when it comes to like a long-term, investment portfolio, you're not going to wait 10 years to see like
this would be back testing, right? Like you could back test it into, and again, you get very small sample sizes because even I said, Nic, back test it to 2005. So we've got 20 years, 8 position portfolio, and you're holding everything for 3 years. Cool. That's roughly 17 times 3. So cool. We've got, what is that, 54, 51, 51 data points. Like that's not that great, but it is interesting because if we're saying, hey, the future AI is going to be increasingly better qualitative, launching an AI fund right now would like kind of be the model, you know?
Yeah. So I think it's a bit hard with large language model in the sense that if you show them just like past data and you try to find some correlation, the LLM baked in their training set, they already know the future. Because you can say to the LLM, well, look only from 2008 to 2015, and give me an answer for that parameter. But in the training data, they know the story. They already know 2023, or they have a guess.
Mm-hmm.
That you train on Apple, and you say look only at this, but the LLM knows that Steve Jobs will come back, and you have your prompt where you say, hey, just consider that time frame. So I think the long term is very hard. That's why I think quantitative finance is focused on the short term. I did see a large trading operation in New York where they were kind of like trading the news. And so it was like a bunch of like kids 25 to 30 years old. I mean, Bloomberg Terminal, all of them. And they were like reading the news and would say, okay, there is like a gas leak here. And then they were trying to find companies that have like exposed to this, gas thing. And then they were like quickly looking at, the balance sheet and stuff and like trying to short or, I do think like a LLM can do a better job for that. You read all
Yeah,
the news.
I have no doubt about that. Though you do worry about, I have no doubt it could read a news article and do exactly what you're saying faster than everyone. Though I will say, I do remain impressed by how often you'll see something and an hour you'd be like, oh, that might not have been that good for this company, and it'll take kind of an hour for it to lead into the price. So maybe there's still room for
Yeah.
humans, or maybe AI can do it better. I feel like we should think about launching like, hey, here's an AI 8 stock portfolio. It like finds the
Yeah.
best qualitative things. I think that could be interesting.
Yeah.
Let me ask you separately. So speaking of concentrated portfolios, I was talking to another friend, and I get similar conversation where I was like, man, I'm not saying all your thinking should be outsourced to AI, but I was giving them my pitch. Like it really, it frees up a lot of time. A lot of things you do by hand, it will free up. And he had a twofold pitch. One, and I agree with him. I actually kind of cleaned this model up. He was like, look, there's the old thing in banking. I build every model myself. And it's not because the Bloomberg models aren't impressive or whatever you want to download. You build every model yourself because then you're building your understanding of the company, right? And there's just something unique about plugging in next year revenue growth will be 5% and kind of flowing it through all the income statements and seeing how it impacts the company versus just having it presented to you, right? So his thing was once you start using AI, you kind of move away from the building models yourself. So that was number one. I'll let you respond to that, and then I want to hit you with his like maybe more powerful point on number two.
I think it's very true. I think that's the unknown is like for us human, the more we take notes, the more we do the work, like the manual work, then we learn. Um, but then I was chatting with a customer this morning. They were analyzing the compensation of the Chipotle CEO. So they say, okay, they look at the Def 14A, they look at he has a cash incentive like $2 million. And they was like, okay, the $2 million, 75% of that is like company performance factor. And 40% of that is like comparable sales, comparable restaurant sales and cash flow margin and stuff. So, they spend a lot of time and they have come up with this analysis on the comp of this guy. And we were discussing together is like, yeah, but look, the AI can do this, can do also the previous CEO, can benchmark this compensation with this new compensation he has at Starbucks, and can look also 5 different companies. And so, yes, you can do that manually for like 2 hours and learn about his compensation, or you can have an output and start learning about, is the compensation standard, is everything weird, the composition of the CEO before and the CEO now. And ultimately, I think you will have to delegate that to AI and try to learn on more complex information. And at some point, you just have to have the taste, the pattern recognition, the understanding, where you say, hey, AI, gather me all these trends, and then I'm going to think hard about this. I'm going to stop spending my time on just like, data extraction.
No, my solution, and not that my solution is perfect or anything, but my solution has been I love using AI for the broad stuff. I mentioned the Caesars earlier, or I believe that Adam running for Fintool now. I love saying, hey, go summarize the past 5 years of executive comp and trends at this company and maybe some of the company's peers, right? Because that information, that takes multiple hours digging through these proxies. These proxies are massive statements, and I feel like they're intentionally a little bit obfuscated, and AI can return it like that. And then what I try to do is look at that, learn from it, and then the company I'm really focused on, maybe spend a little bit more time just on their most recent proxy, right? So I'm getting the nice AI summary, and then I'm trying to understand the most recent one because the most recent one's the one we're on, and it's the one that really matters. And I can use the insights from the previous ones and the peers to do that. So that's just been my solution. I'll pause there if you have any thoughts on that process or anything. And I do have one more question I wanted to ask.
Yeah, I think it's exactly right. And back to the conversation I had with a customer about Scott, the CEO of Chipotle. So he did all his analysis, and I think we did the same with AI, and he missed something. Is because when you ask like Fintool, I compare his compensation to 5 other CEOs, Fintool will flag, hey, there's something that if the guy reaches like 200% of his target, the rest is not paid in cash; it's paid in RSU. And that's something you want to know, right? But it was like probably buried in a footnote or whatever, and you kind of like missed it, and was a key information. So yeah.
This is off the cuff. Well, one of the things I always am interested in is executives with non-standard compensation. So probably the most famous one would be Elon Musk in 2018 or 2019. The Tesla's unadjusted stock, I'm making up numbers, is 100, and they give them tons of stock options that say, hey, if this goes to 300 in the next 8 years, we're going to give you basically $50 billion. But, if it doesn't, it's zero. So you're taking a huge upside bet. And he gets it. And then, the Delaware judge says no. And this is all pre-split. So the stock's way up. But that was a very non-standard package. I just want to, how have you found, you can say Fintool specifically, AI, whatever it is, how have you found them analyzing non-standard package? And I think this will flow nicely into my next question.
Yeah. So what we do, and we try to run this analysis offline. We, for instance, like run models and look at the change in compensation metrics. So say, hey, he has an annual cash incentive, and here are the factors. And we are asking basically Fintool to look at all the Def 14A and say, hey, did they change the factor over time? And then you can do one more step, is like, is that correlated with the company, maybe net income decreasing or the stock price crashing, and trying to maybe identify that as a like early red flag. So new Def 14A, new compensation, it was like 50% of the net income. Now it's only 10%. What does it mean? What do they know? And so, yeah, that's we try to do this sort of like complex analysis. Also, like the non-standard comp, like sometimes they have like they don't have a high comp, but then they have like private security budget, private jet, school for the kid type of thing. And
that's
it's kind
standard at this point, to be honest with you.
Yeah, exactly. I should have Fintool for my private jet.
I'll point you to guys some real fun ones if you want. No, one thing I should probably work with you guys on this. One thing I'm trying to work to build better is, one of my favorite signals is, most companies will grant RSUs and options once per year. So, every February, all the execs get RSUs and options. And when they do, they file Form 4s. But every now and then a company will do off-cycle grants, right? They'll say, hey, we're giving them in April this year as well, or something. And that is a really interesting signal, right? Because they normally do that because they do it in April because good news is coming in May and they want to get everybody paid. And every investor loves those signals, but it's very hard to pick up on. And I'll give a small point. Like, I tried it on ChatGPT and Fintool, and ChatGPT's was terrible. It just gave me and Fintool's gave me 20 examples. And I'd say of the 20, only 4 or 5 were actual good, but ChatGPT managed to give me 0, and Fintool actually got me some examples of them. So it's something I can probably modify, but I think it's just a really interesting use case where everything sees just a Form 4. But if you can find the right context and stuff, AI can solve it. Let me ask my other question. So my friend who I was talking to, the other thing he said, and I can see this, he was like, look, Andrew, again, quantitative for AI, quantitative is so good, right? The Renaissance, large. When you're running a concentrated value fund, the the edge is in the nuance. The edge is in
Yeah.
the edge cases, right? And this is an example I came up with, but I think you'd agree. Like Cliff Sosin with Carvana. Carvana is a stock that was down 90%.
Yeah.
It had every short seller in the world has published a report on it. It was way over levered. The profits were going down. It was shrinking. Like if I had given you that set of facts, every base case, everything would have said that is a zero, right?
Yeah.
But it was the edge case where, and this is N of one, but it was the edge case. And what he was saying is edge cases, right? Oh, Carvana also was the only person who could make that business model profitable. There are lots of other cases, but he was saying, look, you want the nuance, you want the edge case, and that's where the real money is made. And AI is never going to be able to detect that edge case, because what it's going to do is it's going to read Carvana's 10K and it's going to say, hey, I've read 20 10Ks like this and everyone has failed. Everything that has all these red flags, the base rate is terrible, so it's zero. Now, maybe that's saying Carvana was like your negative EV lottery ticket that actually paid off, or maybe it was good, but he was saying you're never going to find the edge case. What would you think about that?
So every Friday at Fintool, we do a presentation on a company. And I think 2 months ago, I chose Carvana. So I think it's a great example where I ask Fintool to look at the accounting, compare with other companies in the space. Like, do they have, and then I put the Heidenberg research report and all this, research. I was like super bearish. And obviously, tons of red flag, right? The father runs a company. He loans money to Carvana. It's blah blah blah. And so yeah, it was full of like red flags. And I think two things. First, that's why we need the human in the loop, someone with that is highly paid for the insights. And that's true for lawyers, because like AI is writing everything, but you need someone with like a deep understanding and someone to make the bet. And second of all, that's why also finance is really hard, is because it's fat tail. It's because this Carvana thing, it might have been a zero. It might be a zero now. Maybe it's a fraud. I mean, we don't know, but yet the stock is rising. And if you were shorting, well, you lose a lot of money. And so I think that's why we need the human in the loop, is because it's fat tail, and if it has consequences to be wrong. And sometimes, in 1 second you can be wrong and it's game over. So
No, and look, it's not Carvana, Tesla, right?
yeah.
The red flags and the short sellers who've been burnt on Tesla are unbelievable, right? And
Yeah.
the base case, hey, we're starting up a auto manufacturer. Cool, all of those go bankrupt. Like
Yeah.
the red flags with it just goes. Now, again, this comes back to, I think my friends would have said, hey, if you built a bucket of companies that had all of the Carvana, all of the things I just said, or all the Tesla characteristics, 98% of them would probably massively underperform, but it's the two that work. And if you're running a quant where you're spreading the bet over 100, you can do that. But if you're doing qualitative where you're saying, I'm picking one, like it's very difficult to use the AI there. So yeah, I don't know.
Yeah, because you don't have a basket, right? Because you can make the case where you create a sort of like ETF and you short the ETF of all the companies that AI has identified. But if the premise is I have like 10 stock, I'm a super concentrated long only investor, then it's hard. And for Tesla, I try with Fintool. I say, hey, give me the real value of the car business. How many cars are they selling? And, get rid of this like EV credit stuff, and, comes up with maybe a valuation number. But then you need to say, okay, yeah, well, you need to factor the fact that Elon Musk is Elon Musk, that the credit thing is good, and blah, blah, blah. And ultimately you make a decision.
I've done that math, but as my friend Dan once said, look, the issue with going short Tesla is you do the math and you're like, okay, the entire global auto industry is worth 300 billion and Tesla's trading for $1 trillion. So it's worth triple the global auto industry. Like that's your bear case. And then the bull case is Elon Musk is taking us to the moon. It's like you're just talking different stories at that point. Last question. Go ahead.
No, I was thinking about when I read the Fintool analysis, there was like a part about the super goodwill that was Elon Musk, and also the long shot. I think it was like Optimus robots and the sort of like NVIDIA competitors that they are trying to build. And like even if the AI was like, it's ton of goodwill for the company, but maybe not, 700 billion. But that's why you need the human in the loop at the end.
No, it's and just not on Tesla, but like again, it's on the edge cases. There's a company that me and my friend debate all the time, and he's like, "Look, this company has built this killer model. They've got this killer mousetrap, razor blade. The returns on invested capital are going to be crazy. It's a medical device company," and I'll be like, "That's cool, but we're valuing them at $1 billion, and it took like their R&D to develop this device was $4 million. Like, it's really hard for me to understand how you can make $1 billion."
Yeah.
A $1 billion company with a $4 million R&D product. And like, I understand more goes into the R&D, their Salesforce and everything, but like, it feels like somebody else could come and copy this product and sell it 50% cheaper. But it's kind of where like, look, Tesla, for years, one of the many short things has been, hey, their R&D makes no sense versus what they're saying when they're training globally. But I guess somehow they're making it work, Just a couple more quick. This might be the last question, but one thing, I think Fintool might be about to change it, but Fintool right now, it's only focused on SEC filings. And I go back and forth with like, hey, is it better when I'm evaluating a company to do it in Fintool and not have to worry about the hallucination where like I've had ChatGPT when I ask it, hey, what was this company's earnings 3 years ago? Like it'll pull a different company's earnings or it'll pull an earnings number from Seeking Alpha, which was not the company's earnings, right?
Yeah.
What's the advantages and disadvantages? And it doesn't have to be Fintool specific, but what's the advantages and disadvantages of saying like, hey, let's only use company filing. So like I've got something where if the company is lying there, they will be held legally liable and go to jail for it. Like the information there can be generally trusted unless it's an outright accounting fraud versus, hey, let's go broader and incorporate things on the internet when I'm kind of studying this company and using AI.
Yeah, no, you're right. I mean, one of our biggest customers at first they were like, hey, don't bother, I'm using ChatGPT. And I think 3 months after, they realized like non-stop hallucinations, right? And using the search. And we have a benchmark. There's a benchmark called Finance Bench. It's the leading benchmark for equity research where analysts put the question and the answer, and then you run LLM model. So you run ChatGPT with Surge, you run Claude, you run Fintool, and then you have a score of accuracy, right? And I think Fintool is like 98%. ChatGPT, I think, is like 40%. Perplexity might be like 50 something. So our approach is we have to start with the ultimate source of truth and be very good with that, even if it means the product might be slower and limited in data sources. Now we added after investor presentation and earning calls. Now we added all the YouTube transcript, and we consider that as a source of truth, because if Zuckerberg on the podcast is saying talking about his vision of AI CapEx spends in 2030, it's him. So it's a source of truth. And now we're going to release in the next 2 weeks the web, and this is a tricky one because if it searches like Seeking Alpha and Motley Fool and return a bunch of data, it's game over because it would be wrong, right? So the way we have to build it is it does search the web for very specific information, and then it's a bit slow because then we have to verify the accuracy of every piece of information and then integrate that into the answer, because the best way to lose a customer, to lose a PM, is the guy asks about like diluted share count, whatever, and you show an answer with either like a hallucination or a wrong number. He was like lose trust and be very unhappy. And so that's why also finance is hard, and that's why most like finance chat retrieval software are a bit slow, is because if you want to do it right, it's like so many different steps.
Let me just, in terms of my use case, my personal use case, to make it very selfish, I generally am not uploading much to Fintool, ChatGPT, name it when I'm doing something. Now, I will point them to, hey, I'm looking at GE, particularly the GE's 10K, like tell me X, Y, Z, or I'm looking at Pfizer and I want to understand their oncology program. Pfizer just had a oncology investor day. You can find the transcript here. Go look at that. How much should I be uploading my personal stuff onto Chat GPT, Fintool, whatever it is when I'm working with
Yeah.
AI?
I will say the perspective is, as a software vendor, we do everything so you don't have to upload the data. So for instance, we will process, 20,000 podcasts for you, and you will never, download the video, download the audio, whatever. So you will never do that. Having said that, they are private internal memo, maybe Excel file, stuff that you own, and that might be good for the LLM to see. And then, sometimes I don't see what customers, upload, but some of them that they tell me, they have this interesting blog post that they think it's valuable. And we're going to look at that blog post, or they have this piece of like sell-side research published by one of the friend, right? Then they're going to upload that.
Your clients
Because
who are uploading, are they getting better results, do you think?
Um, when you upload, I mean, for instance, I was chatting with a guy. There's this famous blog called Analysis, which is they study, the NVIDIA of the world, and they do very, very detailed research. And it's a blog.
They've been on the podcast a few times. Yeah.
Yeah, this guy's a genius, and yeah, his analysis is so much worth it. And so when you upload and then you ask questions about liquid cooling data center, well, yes, is analysis, matter in terms of, market size, understanding of the technology. Maybe he has a piece of, yes, the Abilene data center is close to completion and it has like 100,000 GPUs and they want to expand to 200,000 GPUs. So then you have the information. So, okay, so they're going to buy GPUs. It's a buying pressure, I want to say that the more information, the better.
No, it's just I'm surprised you said that because a lot of that information is in the public domain, right? So I'm surprised, like uploading. It sounds like what people are trying to do is more say, "Hey, I'm uploading something in the public domain, whether it's podcast or that post, and get Fintool or AI or whatever it is to really focus on it when it does the analysis." Am I thinking about that correctly?
So, I mean, public, at the end of the day, we're going to capture. But let's say you have an expert call. Let's say you call the management team, you call IR, and you have the transcript of the call. It's not available. It's only on your computer. This is the sort of information you will upload.
Should I be legal requirements on everything?
Yeah.
Should I be recording my calls with management teams, whatever it is? Should I be recording them and then uploading them when I'm looking for processing?
I have discussed with so many customers where they use recording software. They use like Granola. They record on Zoom. And then on their SharePoint or OneDrive, they have all the transcript.
So again, if it's legal, I do try to get recordings of my calls with management, but it's generally for me to go back and listen to my notes. And one thing I worry about, like, I've had this issue with ChatGPT before, where for a while I was doing a lot of legal analysis in it, and I noticed, hey, if I upload if you and I are in court, and I upload 6 filings from you and 5 filings from me, and I ask ChatGPT who has the better argument, I noticed it was always saying you because I had put 6 documents from you and 5 documents from me, right?
Yeah.
And I worry if I do a management call, like it's going to incorporate too much of my bias. So if I do, I can't help it, right? If I'm short a company, I hate a company, my questions are probably going to be more pointed than if I'm long a company. Or if I'm long a company and they announce a really bad quarter, my questions are probably going to be more. And I'm worried like it's going to incorporate too much of my bias. Now, obviously, there are things that are said that, not that I'm getting MNPI, but they're just different or phrased different than they were in public. But I kind of worried about giving too much bias when I was uploading that if I'm asking the AI to interpret it in any way.
Yeah, you're so right. I think like the ChatGPT is a horizontal product. It's worth like $20 a month. They are trying to cover like many, many use cases. Most of them are like consumer type of use cases, right? And that's why in every vertical, you have like big software vendor. They leverage the same type of technology, but they do a better job at understanding the information, avoiding the biases. So if you go to legal, you'll find the Harvey, the Legora, which are like big software vendor now. And yes, when you upload like a brief and you compare, it won't say this guy is better because he uploaded like more data, compared to ChatGPT. And then the next step is how you can reduce the bias. And I think I see that in earning call. If you don't do anything and you just feed an earning call and you ask, the LLM, is it bullish for the company? Is it bearish? Well, if the stock is down, the CEO is always like pumping up, saying, yes, we're going to make it. We have this new transformation. I'm cutting costs. And so you need these extra layers for the AI to understand, okay, be rational, forget about his language, look at the numbers, put that into context, look at the 5 earning calls, you look at, other companies and then answer.
If you have 5 more minutes, I'd love to just pull on
Yeah.
this just a little bit more. So let's say I'm going to start recording my calls with management teams and uploading them to Fintool, ChatGPT, whatever it is for AI analysis. How should I be thinking about my conversations with management teams in ways that would make the upload maximally beneficial for AI?
First of all, when you're meeting the management team, we have this like workflows in Fintool, which is sort of like prompt library. And one of the most popular is like read the past 3 to 4 earning calls, look at the number, and generate questions for the management team. And it is used a lot. So I guess like customers just like ask Fintool to generate very thoughtful questions.
Do you know why I choose it? Because every investor has a situation where they're going, you're flying to a conference. You might as well meet as many companies as you can while you're there. You have 4 companies, and you get 6 companies thrown in your schedule, and those meetings are the worst. And I will tell you, having been at big firms before, people will pay huge money to get good questions to ask someone like that are more than walk me through the 10K just in that situation alone. So I totally
Yes.
get it.
It happened to me Monday night. I was with a large bank. They do a bus tour of every, tech public companies, and PMs, a very big firm, top analysts, and they went to LA and they had a meeting with Snapchat. And here they had a meeting in SF with DoorDash and great companies. And they were like, and the guy was like, "What are we gonna ask on Snapchat?" And he was like so lost. And in his head, he has, okay, well, stock-based compensation is through the roof, revenue is kind of flattish. And it was like, I need the AI to ask thoughtful question. Otherwise, in the meeting, when I'm going to ask anything, it will be weird. So yeah, I see the use case.
Oh, but back to my original question. So I'm going to have a conversation with the management team, right? And I'm going to record it. How should heck, I might start doing this with the podcast, because obviously I hope I'm having smart guests on companies, but I'm having a conversation with the management team. How should I frame the conversation in a way that I could then upload it and make it maximally beneficial? Do I need to be steering them to like providing numerical answers to everything to make it easier? Do I need to be asking them to keep everything like tightly defined? How can I ask get a good transcript or recording to give into AI?
I think now you have like several like recording software. I think Granola is the leading like recording software. They will do a great job at just like getting the raw transcript, creating notes. And so I guess at the end of the day, it's how can you ask like small question to extract some sort of additional information.
What type of questions would most feed the AI with something? Like, is it getting
Mm.
numerical answers, or would it be like, hey, you guys said same store sales were down 2%. Can you break it down in 4 different ways? Just getting like statistical breakdowns of things that they've already said. What would be the best?
But something I learned talking about the AIR person at Datadog, she's extremely smart. She was, I think, a PM before, and she said, I'm answering all the question with all the publicly available information. But there's a trick is sometimes people don't ask about the company, they ask about the competitors. So, that they are in the Dollar Tree meeting and they say, hey, do you think like Dollar General, they see a sort of like inflection point or impact on inflation or as a way to get an answer? And they say, oh yeah, they see a ton of, pressure from inflation. And then you can deduct that there too, they struggle with that or their inventory. And I don't know. I think the heart of asking good question to management team and having them answer the question is I don't know. It's an art.
No, look, what you said there is interesting to me, because I had not thought of, as they're saying, hopefully they're not giving you MNPI when you're calling like the IR team or the management team. But I hadn't thought of that. Like, hey, forget your company, McDonald's, forget you guys. I want to talk about Burger King. Like their numbers looked a little bit different than yours last quarter. Let's talk about Burger King and what they're seeing that's different. And then, as when if they're saying, oh, it's got to be inflation, Burger King's seeing a lot of inflation, then you could probably guess McDonald's is like has inflation on their mind. So that's really interesting. Nic, this has been super useful. I probably need to have you guys spend more time. Dak actually showed me, you mentioned the workflows, and I've been spending a lot of time with some of the historical comp workflows. Again, that's where I've really gotten a lot of benefit from, but I probably need to spend more time on it. Any last thoughts before we wrap this up?
No, well, a last thought on AI is that it is extremely early. That I think most people form an opinion on the technology as it is today. And because as human being, it's very hard to grasp what an exponential is. Sometimes you try something, 3 months later, it's completely different, but you have the opinion of what it was like 3 months before. And
you're hitting the nail on the head. It's funny you say that today because it was last night or today, Google released their new video editor and people were like, here's the video that they were pumping out 3 years ago. And here it is today. And everybody was mocking it 3 years ago. And today it looks like literal best movie quality things. And I do have some friends when I talk to them, I'm like, hey, I'm spending an hour in AI every day, whether it's ChatGPT, Fintool, whatever. And like an hour, like I tried that 2 years ago and it was worse than Google. I'm like, man, 2 years, it's just crazy how much better it's gotten over that time.
Yeah, that's why you need to stay curious, and it's also hard, as I'm always pushing my team, like, hey, use this new AI tool. Then they're like, hey, but it sucks last month, and then you say, okay, I will give it a try. It's like, oh wow, I'm doing so much with it now, and it's just exhausting. Just like keeping up with AI news in general is exhausting, but at the end of the day, it's worth it because if you can have an edge, if it does your job, that's good.
The worry I want to get mad at my friends when I'm like, I'm spending a lot of time in AI and they're like, that thing, it's so dumb. It's like, dude, I literally just had a conversation with you where I'm like, hey, I'm worried AI is going to replace every quantitative finance. And you're like, AI is not as good as Google. Like, yeah, I think it's probably a little bit better than Google, but it's interesting. Like, as you said, stay curious, but I'm worried it's one of those things, if you weren't using email 10 years ago, you were just dead, right? Like email's table stakes. And I'm worried it's one of those things where, unfortunately, as Buffett said, with the textile mills, like you invest in new textile mills and it sounds great, but everybody makes the investment. So it's kind of table stakes just to compete. Nobody earns excess returns. I'm worried AI is one of those things like it's table stakes. If you don't use it, you get your face ripped off. And if you do use it, like the returns just come down even further because it makes the markets more and more efficient and it just gets tougher and tougher over time.
But the gap is so huge, though. I mean, I work I go into big firms, and I don't want to say names. That we are not allowed to use like ChatGPT at work, so we don't have it. I cannot even use it on my personal computer. It's we have some. Sometimes we get call from CEOs that's like, I need AI in my firm, but most of them they don't even know what it is. So I think at least for now, there's like a huge gap in the market. Sometimes we see some customers, I don't know, like Kennedy Capital, those guys are, small cap oriented. They are in St. Louis, Missouri. Okay. They are so AI enhanced compared to some of the folks I go see in New York. And it's just a matter of like, they had like two, three great PM there. They were like, okay, we need to get on this thing.
Well, I'm going to be following up and making you make an introduction to me to Kennedy Capital because I want to pick their brain and start talking to them. But Nic, this has been awesome. Look, again, Fintool was like the one that opened my eyes to, oh my God, you start putting things in and things that took you a day before it just like spits it out like that. And you can spend a lot of time on other stuff. So appreciate you coming on. We'll have to do a follow-up in the near future.
Cool. Thank you.
A quick disclaimer, nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.